The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 5 May 2023. Well, this week I want to start off with the Business Insider talking about how many retail stores are closing. The announced amount retailers in 2023 finds as many as 2,119 stores set to close across the United States. I'll just skip through a fair amount. Bed Bath & Beyond, I think that's everything. I'm not sure. Foot Locker, 545 stores. Tuesday Morning, 487 stores. Bath & Body Works, 50 stores. Gap and Banana Republic, 46 stores. Walmart, even Walmart closing 22 locations. Party City, 31 stores. And even Best Buy, 20 stores. And Amazon is not making money in their food outlets. They are closing them, at least 8 stores, and probably going to close it down. Big Lots, 7 stores. The Real, 6 stores. Macy's, 4. Target, 4. JCPenney's, 2. And that's a wrap. So, as I have said for numerous months, the economy globally is contracting, not expanding. And this is further proof of that in the United States. But again, it's a global phenomena and it will continue. Just want to remind everyone that is not signed up for our free weekly updates, which we usually mail 3 or 4 times a week. All you need is a first name and an email here. The reason I bring this to your attention is we're going to do a special report on strategic metals that will be free. So anyone that's already signed up on this list, you don't have to do it again. You will be getting it as a file. You can either download or PDF or both. And of course, it'll go to our premium members always. It'll be posted on behind the paywall. And one more thing very quickly on the consultations, been getting more of those. If you are a member, you get consultations for half price. So 2 consultations in 1 year, you basically get the report for free. So it's something to keep in mind. We have several clients that do that, and it might be something for your consideration. Okay, so moving on. This is from the blog. It's all free for everyone, as you probably know. This one is about the Load project, which, as many of you know, some are involved, some not. So I'm pointing out, I just did an interview with Load. There is a new vertical integration in the company, or the project, I should say, where we're going from mine to mobile. And we discussed that with the Ian Taves. That was basically the idea of man that started this whole thing. And I met him with David Smith in in Vancouver so many years ago. Richard Groom, you can look up his bio. He's very renowned in the Toronto area for a money manager and bringing deals to the table and funding them. So pretty exciting if you are involved, or even if you're not, to have a look at that. One of the latest updates I've done on the global economy, trust failing in the system, and the Las Vegas Money Show. And this was very interesting. I spoke with the group down there. The workshop is Silver and Asymmetric Trade. I went through the whole thing, both from a monetary perspective and also from an industrial perspective. Some of my friends were there from Goldcore in Ireland. They flew all the way from Ireland and attended the Money Show in Las Vegas. A bit tiring, but it was well worth the trip.
There is nothing more critical to your financial future than a sound money system. This is the premise of the Morgan Report. To understand where you are going, you need to know where we've been and why our current monetary system is crumbling like a house of cards. More importantly, you need to know how to build and preserve your wealth even in these uncertain market conditions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history. Will you be in when it happens, or sitting on the sidelines wondering what just happened? Join our free email list at themorganreport.com. Become informed, awake, and aware.
Technically, both gold and silver are looking positive here, and based on the latest Commitment of Traders report, there is moves to the upside available. In other words, the open interest it's high, but not high enough to worry me. I think we've still got upside momentum. Maybe, and we will get a pullback at some point, but it's hard to time the market exactly. Regardless, I want to bring up this article that I've shown a couple times, and I think it bears repeating. It's very old, came from 2011. Class action lawsuit accuses UBS of charging storage fees on phantom silver. Talks about this person that purchased silver and was being charged $25 per month for storage fees, asked for the delivery, and got the runaround. And that's one that was being positioned at the time. But the one that's really interesting is one that's in this bold. And this is where a similar lawsuit was filed against Morgan Stanley in 2007. And in that case, small investors were also claiming they'd been defrauded into participating into an unallocated metal storage. Some of you that follow our work carefully will probably remember John Adams from Australia and myself pretty much made a big deal about unallocated accounts. And there were a lot of people that paid attention to that and decided that they would call the facility that they were using as an unallocated metal storage and asked it to be allocated. And that went on for some time. Anyway, this is going through that again. But what's interesting here on this Morgan Stanley lawsuit is the bank defended itself by alleging, among other defenses, that it was simply following standard industry practices. Let that sink in for a minute. So they basically didn't have the silver. They were charging storage fees. They didn't even have a vault. They were charging storage fees. But they said it was following standard industry practices. In other words, the amount of information given to customers, the unallocated nature of the scheme, as well as charging of storage fees for imaginary metal were standard industry practices. Is that true? Well, certainly was true for Morgan Stanley. In light of what we now know, maybe they were telling the truth. Morgan Stanley did eventually settle for a multi-million-dollar payout, but it continued to deny liability. UBS has not been answered. Of course, it has by now, and we don't know what their response may be. So this is something I just like to point out, the old idea that's been told by almost all of us in the community, and that is if you don't hold it, you don't own it. Are there storage facilities that are on the up and up? And the answer is yes, absolutely. Are all of them? No, they're not. So it behooves you, if you're in an unallocated situation, to check with whoever the provider is. And I would definitely recommend you move it not only from unallocated to allocated at a minimum, but if you can, make it segregated. Segregated is basically your pile, your stack, and it's only your stack. It's segregated from anything else. And that's what you want. A lot of these things, like the banking system, some of these facilities that are purportedly holding metal will turn out to be not the case. First State Trust, I think I have the name right, had recently a big problem. They had some of the gold and silver, but not all of it. And many that have had, and a lot of IRA metals, precious metals IRAs were in that facility. So be careful, word to the wise. I'm going to leave it there this week. I'm having a bit of technical issues with my computer. I couldn't bring up a couple of articles that I wanted to show you, but you get the gist of it. Remember to sign up for the free email. And also, last thing is I did a interview with Andres Robles, friend and colleague from Mexico. And we went through, and he did really step by step, what's really going on with the quote unquote Mexican nationalization. That's probably one question I get over and over and over again. He is at the top tier VP of the mining commission that is totally in the know. And so he brought that to our premium members. I think it was about a 10 or 15 minute interview. And so there's really nothing to worry about with concessions that are already available. In other words, anything that's new coming on the books, you might be concerned, but anything that's already there and has a concession, so all the mines that are owned by Pan American or First Majestic or Minorum or some of these other companies that we know in Mexico are fine. And that's the law, and I doubt it's going to be circumvented. So that will wrap it up for this week. This is David Morgan of themorganreport.com. And I'll be back with you next week.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.